Hello, it's Brian Rezny. It's question and answer day. Big question that's come up a lot is about tariffs, and I want to talk just a little bit about tariffs. Trade wars, is that going to happen in the U.S.? I firmly believe it will not. I think our current president is talking the right talk in order to get other countries who have basically used the U.S. as a piggy bank for decades. One of the problems that you, the investor, faces is basically the media and hyped up news. And I will tell you from doing a TV and radio show and getting a lot of calls and questions from various investors around the country, investors are making emotional decisions because of the tariff talk. I've had people say, Brian, are you liquidating your portfolio at your firm for your clients based upon these tariff talks? Absolutely not. That would be ridiculous. If anything, there's areas that are great opportunity that investors should be shifting assets to. So tariffs, while a real tariff war would be a problem, I firmly believe we're not going to have that. I would be looking at repositioning portfolios for maybe being a little too conservative to having a little bit more growth areas. Some of the areas I've talked about, obviously at the beginning of the year, emerging markets, U.S. economy. I would completely stay out of Europe. Again, slow growth. And we've exited our positions at our firm there months ago. And the reason for that is, again, we're starting to see, again, Europe having issues with trying to grow their economy. Very mature, somewhat socialist in aspects. That is not a recipe for growth. The U.S. economy, emerging market economies, in my opinion, have great opportunity. I also see great opportunity in holding cash for conservative investors, meaning investors who have overweighted the boat in bonds. I have had a tremendous amount of questions about bond investments from our TV radio show listeners and non-clients. People are oversaturated, holding 40 to 60% in various bond investments, only to watch their portfolio drop this year 4 to 5%, while the equity markets are actually net positive, generally speaking. Investors, sometimes you want to hold a little more cash instead of being invested in the wrong kind of investments, and I firmly believe there's a lot of you investors who are over-allocated to bonds because you keep listening to your so-called advisors say, hold on, things will come back. If rates keep going up, if the economy keeps doing well, we're going to get slow interest rate increases, which is going to wreak havoc on the typical over-allocated investor in bonds. If you're not a client of our firm, it's time you became a client. Call us for a consultation, experience real advice and real money management. Make sure you have yourself a safe and profitable day.